Welcome, everybody. It's Andy Lombard from the Arizona Commerce Authority. I'm Executive Vice President. We have a great lineup for you today on our Small Business Boot Camp. Thank you for joining us. This is our third day in a series. We're going to be running this for 6 weeks daily from 9 a.m. to 10 a.m. Just a quick recap. We are so fortunate to have really great partner organizations, including today. Ellen's going to be presenting. We'll go through that in a little bit. But again, thank you to all of our partners. This has been an incredible effort, and we're going to continue to grow this list. If there is interest, please do reach out to us. We'll be providing more information. Again, the Small Business Bootcamp and Resource Collective is designed for businesses 20 employees or less. Anybody can join this, any business, whether it's a tech or non-tech business, any small business larger than 20. We just wanted to position this for our employees of 20 and less. It is a statewide initiative. Again, our community partners have really come up beautifully for us, and we're thankful for that. We are also putting together a resource collective. This microsite will be on the Arizona Commerce Authority site, azcommerce.com. You can click on our COVID response right on the front page. We've got a great resource library of many topics, including our Bootcamp and Resource Collective. Our sessions are online and recorded. So is the information and the decks for every single presentation, and we'll continue to add resource links for each of those sessions. You can go on our site to check that out. Mark will publish that on the chat, so you can go take a look at that. We went through PPP and EIDL, quick sources of cash and cash flow items, including revenue generation items and other ways to think about your business. Today, we're going to have an important topic that is probably on the minds of everyone: engaging with your bank, making sure that that is part of your plan if it isn't already. And we mean by really creating a relationship moving forward and then considering alternative funding sources. So we'll go through that. Again, reminder, our concept is Monday, Tuesday, and Wednesday we'll have new topics, and then Thursday and Friday we're going to have open office hours for guidance, advice, Q&A, and so forth. These are group office hours for now. We're going to look at adjusting that down the road for very specific industries as well as topics. So please join us again tomorrow at 9 a.m. for that. Well, today we're so pleased to have Ellen Curtin join us from Pima Community College. She is just an expert in this topic. We're very fortunate to have Ellen join us. She's been in banking for a long time, and she has had positions as Senior Vice President, Banking Manager for very large organizations, and just a fantastic individual to share this topic with us. So without further ado, I'd like to hand it off to Ellen for her presentation, and we're really appreciative again for everyone joining us today.
Good morning, everyone. I just want to thank the ACA, as we call it fondly at the SBDC, for having us this week speak. Tom Fulcher spoke on Monday about the PPP loans, and we have all become experts by need and responding. So thank you for this opportunity. And this is an area that I think has surprised a lot of business owners who have had to apply for a loan, either never have, they've been able to fund themselves, or have had difficulties in the past, whatever all those might be. So we have a partnership with the Arizona Commerce Authority. They provide resources to us and funding, and I can't be more thankful, especially for the rural communities that most all of our SBDCs serve. So enough about that. Let me start with the economy. Next. Okay, Mark, we're gonna next. Thank you. Okay, so the economy impacts lending. So this is something that everyone's just trying to get through every day versus thinking about today and tomorrow in terms of how do I keep going now and how do I move forward. So lending becomes a critical role. And just let's talk about the economy for a minute. I know we've got all our individual situations, but it's important to understand the things around us that can impact us and also how we make decisions. So during a crisis such as what we're in, the recession was another one, and that was the longest recession in history. So we've recently been through a difficult time, not in comparison to this certainly, but so during this time there's job losses, hundreds of thousands in Arizona alone, and during that time bills still come due. It isn't as if that doesn't happen. So good example are landlords. And when this was early in the process, landlords were sending out notes and saying you need to pay your bill or else. And I have to appreciate Governor Ducey speaking up and saying that won't work. Everyone work together and think about putting those loans at the end, put those payments at the end of the lease. So those are kind of important things. But bills still come due and you want to take care of them. Lenders, bankers do get tight, and this is going to continue for a while. I have an example of a client I was working with that basically had an approval for a loan. It was very tight underwriting, and at the last moment, the bank pulled the approval because they were too concerned with this environment. And so can that happen? That can. If you don't have what's called a commitment letter, the bank can do that. Also, cost of funds will go up. Pricing, lending is all about risk. And you may not have thought about that, but thinking about banks and that a good deal of those funds are our funds. It's our banks on deposit. And so the bank does not want to put those deposits and those funds at risk. And so as things tighten up and things are difficult, then approvals tighten up, and we'll talk about pricing. What about the economic risks? And again, you're probably not thinking a lot about this, but it's a good time to be thinking about them. So the length of time, excuse me, to recover. So we will be in a recession for a while. This won't be just like there may be one day when the governor says, okay, you can go back to work. That doesn't mean that we've recovered. So there's going to be a time to recover individually and as business owners. We have a global economy, and we know the influence that China has with us and those kinds of things, what they're going through, how many buy from us and are they buying. So global economy enters into this. These are all the things that bankers think about in making loan decisions. Stock market fluctuations, you've all seen that. Congress divided. Last week, it took 3 days to get agreement across the aisle for something very critical. Just one example. And cybersecurity. We're not going to talk about that today, but please keep that in mind because it's really important to be watching that. There's more than ever hackers out there, and so please be diligent. So next. So what is the lending environment? So bankers are tightening their lending practices, I just mentioned. Client relationships are more than ever. If you leave this webinar today with just one thing, it's going to be building a strong banker relationship. And it's really interesting as I've worked with all these businesses, a good majority do not know their banker. And during this period of time, applying for the PPP loans, I will tell you what made a difference in the majority of the cases is when individuals knew their banker, because early on there was a list of documents that were needed. People went in, tried to respond to them, but it was for the, especially if we're talking about PPP loans, they were very specific what needed to be done. It was confusing for folks until the banks really got in gear, came up with some spreadsheets, which made it easier. But if you didn't have a banker to help walk you through the process, I have to tell you that a majority of our clients were getting messages like, you're missing something, you're missing a piece of documentation, but they would not tell them what that was. And without fully understanding the process, they just got left trying everything they could. And gratefully, they came to the SBDC. And we were able to walk them through that. but I've never seen it more in evidence than now, how important a banking relationship is. Once these PPPs are over, traditional lending will be more rigorous. So you need to be, again, still keeping that relationship with your bankers, because there's going to be after the fact. Traditional underwriting will resume. Right now, it's pretty much, it's interesting, we are SBA funded as well as the college funding us. And it's interesting how the SBA, who has typically the most rigorous underwriting, had the most minimal underwriting in this process. And so while it seemed confusing, it was pretty short form. And so when we get back into, quote unquote, normal environment, SBA loans are much more complex and involved than traditional loans. So SBA loans during the recession were the key. I don't know the exact percentage, but in my banker background, I would say a good majority were SBA guaranteed, and I'll go into that a little bit more. So the lending options, that we're going to talk about types of loans, terms of loans, and the different levels of lenders. Okay, so moving forward, how are you going to handle your cash needs? So you need to keep this open dialogue with your banker. If you hear one message today, that will be it. You have the person that you go up to, the merchant teller. I don't know if they use that term anymore, but your merchant person would be the person you know best. You need to know your commercial banker. So please take advantage of that. And also with the SBDC, we help you also map out a plan. When you're going to need to do this, we help you put loan packages together. It's really important. If I'm an underwriter and I get 2 packages in front of me, one of them's complete, I'm going to finish that. If I get one that's incomplete, then I'm going to put it to the side. So your bankers are really important. And they're what's called cash flow lenders. So you're all thinking about the bottom line on your profit and loss statement, but bankers go much deeper. And that's a topic for another day. Next. So what do bankers want to know? This is it. You are a person with integrity, that people who pay back loans, and I want to make sure I get through all this, but a very quick story. I had a client who had 2 kinds of customers, and one of them was a big company, about 50%, and the other was smaller companies. And he was having difficulty because the big company could demand lower prices, so the margins were smaller. And so I told him that in 6 months down the road, I thought he'd be out of business. And he just looked at me like I was crazy. But I said, go back and see if you can change those terms, do that kind of thing. And he did, and they weren't going to move naturally. So basically, in the 6 months, less than that, he would be ready to go out of business. So he had a equity in his home, and to his credit, he took an equity loan out and paid off the commercial loan. So that's the kind of things that bankers are looking for. The credit score tells that story as well. And profitability is, in a normal environment, is important, but debt coverage is even more. And then collateral. This has become a norm instead of an exception. So collateral means that any asset you own, it could be accounts receivable, it could be your home, it could be your building, any of those are potential collateral. And SBA is a collateral lender in large part. So when's the right time to talk to a banker? Before you need the money and having an ongoing relationship. Next. So what type of loans will we be talking about? So we'll be talking about what we have now and what we have going forward. So how does a banker think? All right, clients come first, a good banker. And it's really important to get to know your banker and feel the strength of your banker. We have clients all the time that we talk with that are working with a banker that's not engaged. Just kind of says, here's your paperwork, pass it in. That's not the kind of banker you want. Make sure you have a banker It knows your business, cares about your business, keeps an ongoing relationship. And those are the relationships that we value at the SBDC with bankers as we refer clients. Find the right fit for the situation. I think we learned through this the value of the smaller mid-sized banks. And so that in this situation with the PPPs, I would say the most valuable relationships have been these. And so find the right fit, and I'll go a little more into that. And again, people pay you back. That's the example I was talking about. Stay in touch. There's equal responsibility, the banker and the business owner. So you can't say, well, the banker needs to reach out to me. You need to do the same. So make it a real relationship. And then with the bank, they are going to look at the whole relationship. There's deposits, cash management, merchant services. If you have that all with one bank, that's better. And that's because it's profitability for the banks in terms of who they lend to and how much they charge you. Okay, next.
Hey, Ellen, quick question from the group. Sandy has asked, could you repeat the level of personal guarantees that would be needed? Can you repeat that?
Yes, so in all loans, in my history, very few exceptions have been made. Banks and lenders are asking for a personal guarantee. So what that's saying is you sign a document that says, okay, if my business can't pay you back, my personal assets will. And what that's saying is I, as an individual, am committing to pay this loan. And so it's in these particular loans, the PPP loans, have not required that. The disaster loans are much more SBA traditional and has much more requirements. But for the PPP loans, pretty much it's straightforward. You know what, we want to keep your employees working. And with that, we're going to give you money for that. Does that answer the question?
Yeah, is there just a general level of percentage of the loan that would be requiring personal guarantees at 100% or some portion of the loan?
Majority.
Majority.
It's very
Okay.
rare that it would not.
Got it.
Good question. So what do you need to know as a business owner? Do you know the commercial bankers? What's your relationship? And keep bankers informed. You don't just go to them when you need something. You want to be having that ongoing dialogue. Those are the best circumstances. All right, so next. Okay, so types of lenders. So these are a variety. There's the now where we are right now, and then there's the where we're going to be going from here. And that's a lot of what we're trying to accomplish today. I think when thinking about Andy and Bob and Mark, you would all agree we're taking care of the immediate, but if at the same time we can accomplish going forward, that's equally important because your needs are not going to stop at the end of a PPP loan. So that's why we're taking the time today to inform you of all this. So these are the lenders out there. There's commercial banks, there's small to mid-sized banks, which by the way, in this last approval for PPP, more money was allocated because it was realized that the bigger banks used up a lot of those funds and the smaller banks really have a need to serve a majority. So that was good to see. Certified development companies, and those, we have a number of those that work with special kinds of lending. So you don't qualify for a traditional bank loan, but still have a need. And these are special funds that are available. So we have Business Development Finance Corporation, and they have specialty loans. They have a program right now they're supporting for the city of Tucson. There's a grant that's available. It's $1 million availability, and the BDFC is handling those. So finding out these different resources, again, is important. And a lot of, again, at the SBDC, that's what we're doing is matching people up with the right resource. Growth partners are for nonprofits. In the past, nonprofits trying to find funding was very difficult. And so Leslie Pinter's doing a great job with growth partners and coming up with different opportunities. And then what I call second tier lenders. So not everybody's an A customer, if you will. So second tier lenders like DreamSpring, Prestamos, PPEP, they have programs that will lend to those who don't meet traditional guidelines. And they do have SBA funding, but they also have other funding. So I got to say, in what we do at the SBDC, we refer a lot of folks here, and this is a get well. if you have the combination of working with one of these lenders, and especially during this time, and work with the SBDC, what we help do is get you to a more first class, higher, lower interest type lending relationship. So it's very critical to do that. So SBA loans.
Ellen, do you mind speaking about CDFIs, the Community Development Financial Institutions? I think they're lumped into some of the groups, but can you comment on CDFIs?
So often these are funded by the SBA. The SBA wants to help all tiers. So the first part of SBA is, okay, they don't meet traditional underwriting. Let me just take a quick minute to explain why SBA is important funds. Because a bank is looking at a loan, you don't quite qualify, and it's risk, right, to the dollars. If you get an SBA guarantee, which is generally in the range of 75% of the loan, and the loan defaults, then the SBA gives back 75% of that loan. And that puts the lender in a position to want to make a loan where they ordinarily wouldn't. So that's why it's critical. And with CDFIs, that goes a step further to those companies who will not, get approved for traditional lending, but puts them in a position where I can help you right now with this scenario, and it's really more based on where you are, but where you're going, and has some favorable conditions. So you don't have to meet normal bank conditions. They have allowances that really make a difference and get folks a loan they ordinarily wouldn't. Okay. Next.
Thank you.
Sure. Next. Okay, so specific needs. I think it's really important to understand that there are various options. It's, again, have your banker, have them meet all your needs. You're going to generally get the best pricing with that. However, there are other options, and as we start handling things now and going forward, it's important for you to understand these are available. So there are leasing companies that will work. Oftentimes when we have clients come who aren't going to qualify for a loan, the leasing companies and the dealers will often be able to find financing because they have collateral they can take back. And so that can be very favorable. So that's something to be aware of. We just talked about the specialty lenders. The Business Development Finance Corporation has a program called 504. So anyone buying a building who may not have 20% down for traditional bank loans, go through this process where the bank and the BDFC collaborate, and only 10% is required down. So I'm glad to talk specifics about that separately, but that's a great advantage. And then these special grants, and that was one that I was mentioning. The city of Tucson the mayor just announced it 2 days ago. It's $1 million, and it's to help those businesses that are in the city of Tucson to make these special grants available. Okay.
Just a quick note, if we could, Ellen, on grants. As these grants start to come up, it is super important, if you are interested in doing it, you do it immediately. The application process for those windows will close dramatically fast just because the level of funding. So when you see a grant, try to keep your eyes open. We're going to do the same. We're going to try to have a resource list of those as they start to come up, but you must apply very quickly.
And I'm glad you brought that up. Just a quick update in terms of the PPP loans. So yes, new funding came in. The biggest issue with those right now is the system, and that the overload was bringing down the system every hour on the hour. And so they had to take some measures where they were only allowing banks so many process an hour. I'd say that's a good thing in one respect. The other is both for the PPP loans, the EIDL loans, all of those, it's first come, first serve. But let me clarify that. Yes, you got in with an application, here comes New York, you get a number, and then it goes into process. That's the first number that you get. What you really want is second stage is to get the SBA number, which means you've been approved. And the approval process is strictly complying with the the parameters of the program. It's not traditional underwriting with your profit and loss statement and all those things. It's very much tied to the payroll, getting it right the first time. So if you have not already applied, be sure and work with your banker. You can work with the SBDC to make sure you have it right going in. There's some great worksheets, and I think Andy, on your site, you probably have that process as well, correct?
Yep, we do, and there's a calculator on our site. We're also going to be answering a lot of questions, I'm sure, today, as well as Thursday and Friday on that as well. There was one question, if we could, Ellen, related to that. Once you apply through your bank has given you an approval number, or at least an application number.
Right.
They then put that into the SBA. The question was, is there anything a small business can do at that point to expedite that process? And I'd just like you or Robert to comment on that very quickly.
Yeah, so that's basically where I was trying to go with this, which is a great question. So the first part of the process is getting in and getting in line, if you will. And just so that you know, with the PPP, with all the loans, what they've done with the extra funds is taking care of people already in the queue first. Having said that, you get your number, so you're in the queue. The most critical next part that, again, if you don't have a banker relationship, you're not knowing, is making sure everything is absolutely correct that's going in there. If you need help with that, let us know. But if you leave one thing out, you move over, and they don't put you back on top. So it is so critical to get it right the first time. Get in. The approval process is very straightforward. This isn't underwriting like on regular loans. This is not that. This is basically you pass or fail. And so having a complete package is the one thing that's going to move you forward to what's called an SBA. There's an SBA number that's given. And once you have that, then you're in the funding queue, as long as funds remain. So I just can't stress, importantly enough, and I've done this as a banker, I've done this as, with the SBDC, have a complete package, everything that they ask. Don't give them anything frivolous. It's very straightforward, Andy and Bob. So just follow that. If you need some help, again, we have the sites where we have an outline of what that is. And if you need one-on-one help, we're glad to do that. Okay. And the same thing with the EIDL, the advanced loans. They are not open for applications yet. They want to process what they have, which is, again, is only right. So can't reiterate enough, have it correct first time in, stay in that queue. Once you get an SBA number, then you're in line to get funded. The good news is once that happens, funding happens within 24 hours. So if you get to the finish line and you get that SBA number, you're in line to get funded as long as there's funds. So you want to be in that line. Okay, so once we're through with the specialty loans, what kind of loans are there? There's revolving lines of credit. This is not meant to offset lack of profit. This is for using, say you get a big contract and you have to front costs, and you're still going through that right now. You have to front costs, you have to pay people, and then you get to bill and collect your money. So there's a gap, and that's what the line of credit is meant to be. You need to clear this once a year for 30 days generally, and that's to prove it's a line of credit and not just a loan. I had a client that this is so important to have know your banker and have them working with you that had a line of credit, but they went in and applied for an equipment loan, which should have been a term loan, 60 months, payments at X, done. Instead, this person that they were working with that they didn't know put them into a line of credit. Well, a line of credit has to, again, be out 30 days. Well, a term loan is not. It's 60 months, so much of a payment, that's it. So what ended up happening is, without conversation, this is a larger bank, when he wasn't cleared out of debt, they put him in special assets. Special assets, instead of their payments being $1,500 a month, went to $8,000 a month. We were able to rescue them, but it's really important. Again, this is where your banker comes in, you have conversations, you know exactly what's going on. So during the crisis, and I know the Arizona Commerce Authority is trying to help you come out of the crisis well and know what is going to be available there. Fixed loans, again, equipment, consolidate debt, and this may be a very good tool after this is over to be taking a look at what you ended up with, what maybe you had to use a lot of credit cards that are higher interest or different things. So post-crisis, you know, maybe it makes sense to consolidate and lower payments. We talked about how to purchase vehicles and using the various vehicles for that. These are usually 5 to 7 years. The real estate loans, again, purchasing real property, generally a fixed rate, although now there's some varying options where they may reprice the loans because of the changing environment. Next. So what does the banker expect you to know? I think I need to finish here in a couple minutes. So the present condition of your company, if you can't describe it, if they say to you, so how are you doing? What's your cash? How are you doing with how you're charging your fees, your costs? Have you looked at that in comparisons? So you need to be able to answer the questions. The worst thing a banker sees is when you can't answer those questions. But the flip side of that is the SBDC, where we work with you on the company. Your financial picture, do you know your competitor information, any new trends? So you need to be informed. So there's the banker part, you want to have the relationship, and you need to know your part. And it's going to be more critical even going forward. Next. Cash flow coverage, I won't go into this a lot, but this is traditional underwriting. When the banker is looking at your P&L and you're thinking, I made $100,000. But then on your balance sheet, you have accounts receivable. So you made that money, you invoiced it, but you haven't collected it. So it's cash you don't have. So that's what the bank is doing, is getting into the part of cash flow coverage. So again, this is taking us forward so you understand what you should be doing now to prepare for any loans you may need after the crisis. Next. Your balance sheet, people don't understand this. We have a course we do, a profitability course that explains all of this. But the bank at the bottom of at the end of the day, see where it says cash flow. So your cash needs to cover the new payments of the loan 1.25 times. They want you to have a cushion in there. So in other words, if you have cash flow of 50,000, your debt service is 40, that would be 1.25 coverage. So you want to know this, and this is something with your banker relationship you would know. Next. Okay, this is the SBA loan. So if after this, we're talking about going into an SBA loan, there's 7A. The 504 is the one I was talking about if you're buying a building. SBA preferred lenders, I think you all learned about this. The only ones who have been able to help you with these loans are SBA preferred lenders. So it's important for you to ask that question. SBA guarantees, you will guarantee personally, the business, there's some loan fees, collateral, I put everything but, I used to say as a banker, everything but your firstborn child. But they take collateral. If you have collateral, they take it because they're taking the risk. And they can be a lower down payment, as I mentioned. That's a benefit. Next. I think we're just about. All right. This is really important going forward. And please protect this during this time. Keep your payments. If you have to make minimal payments. But credit scores and deposits are important. So what scores get you the best rates? In the 700s. They're really looking for 700 or more. There's free credit reports. You generally have to pay for a credit score, but believe me, it's worth it. And I don't know if you know this, but this impacts your insurance rates, all kinds of things that you pay for. But importantly, when you go in to borrow, when you have a good credit score, right away that says your integrity. Is it just borrowings? No, that's what I was just saying. Can you improve your score? Yes. So one of the big things is some people have a credit card they've had for 20 years. They don't like the interest rate, so they close it. Well, that shuts down, you know, how long you've had credit. And so keep that in mind. The other part is percentage of usage. So if you go over 50% of usage on your credit, that will impact your score. So you want to try and take a look at that. And then deposits are important because for the banks, when they are looking at the rates for your loans, they're looking at deposits, and that's an overall profitability to the bank. So having your deposits where you have your lending is very much recommended. Next. Okay, this is us, the Small Business Development Center. So no cost one-on-one counseling. Amongst our team, we have strong banking backgrounds, which comes into almost every area of running a business. We help you put the package together and determine the best avenue. And we work with companies after the loan. This is probably the biggest value that people don't realize, to implement the plan that we put together for the bank, and that led to the need for funding. I think that's up to questions.
Great. Yeah, we have about 5 open questions. I'm going to encourage our attendees to use the Q&A section. Fill in your questions there. We'll start at the top, if we could, Ellen.
Sure. Oh, you want me to, let me go into chat.
I can read them out if you needed to, but yeah.
Well, I want to make sure I'm in the right place. So
I'll read the first one for you. The city manager mentioned in a meeting at Rio Nuevo that just received $95 million to be available, but didn't have a lot of details for the grants. We don't have that. I just actually went online to look at that, but we will be monitoring that. If anyone does have any information on that, please go ahead and post that in the chat. We'll do as well. I'll also just deal really quickly with the question from, it says home graph. Other states have been posting up a bulletin board. Does Arizona have this sort of process? So I really encourage you. We are trying to make this a resource collective, but Arizona Commerce Authority has done a really good job of updating their website almost every day. Go check it out. We will try to make our resource collective more of a bulletin board type of messaging to share all of the resources that you have. So as you guys start to see those, please funnel those in. That'll be part of our microsite activity. So that's a really great suggestion. Thank you. Ellen, I don't know if you got the questions up, but Susan Dye had a question. Did you check the post up on that for 1099 S Corp applying for PPP? Either you or Robert can take
oh,
that.
Q&A. Okay, I was in chat.
Robert, I think you have that. Why don't you grab that one if you could?
Robert, or is it Ellen?
Robert?
Yeah, Robert.
Sorry, I was on mute. No, the Q&A, the first one was the city manager mentioned in a meeting yesterday that with Rio Nuevo.
Yeah, we covered that one. Sorry, Robert. Susan Dye, next question. Self-employed 1099. Thank you.
So that the 1099s, depending on how you're doing your bookkeeping, can create a challenge. But 1099 employees are able to do the PPP loan. But you do have to be able to provide the information that the banks are looking for, and it can be a challenge. If you're not using a third-party payroll company, you're going to have to show how you're creating payroll or your Schedule C from the last 2 years. And there is a really good link on the Department of Treasury's website. I'm going to post it here in 1 second in the chat bar that gives an explanation of how to calculate the amounts for the PPP loan for independent contractors and sole proprietors.
Yeah, and what I'm understanding from most of the bankers is that they want them to have filed 2019 and have a Schedule C from 2019. The tough thing that happened here was, the good news was we have till July 15th to file our personal tax returns. However, many people took advantage of that and don't have it. But that's what they're requiring to have for 1099s. In terms of the payroll, the 941s and 940s had to be filed. There should be no reason why people don't have those. Those are absolutely a requirement. And those will validate the payroll. Payroll companies, yes, those are great because they can pull certain criterias that the PPP loans are calling for, but you don't have to have that. But those are really the two sources that they're looking for. They're not looking for other alternatives. So it's really important to have one of those two.
Okay, great. Next question from Home Graph. Ellen, do you have those up? I can read it too. If you need.
Yeah, I'm seeing, you've always been self-funded, meaning we've never been denied because we've never applied. There are a number of companies who have not had to borrow, and congratulations. That means you manage your cash. Others have to use credit. As I mentioned before, it's really a timing. It's not a lack of profit, but a timing issue. So yes, it's now, but I have to say, and that's why I think that we were invited to this topic today, going forward, it's going to be just as critical. If we think the need for cash is over now, it's not. It's going to go forward for a lot of companies. If you're able to sustain yourself going forward, that's great. But I can't say that I think that's going to be the majority. So I'm glad you brought that up, and being sustainable is really important. And a lot of that gets into keeping your relationships with your clients and those kinds of things. But I think that the need is going to continue to a different degree.
So I think the message there is, even in this situation where you have not had to borrow before, consider a deep relationship with your banking partners, make sure that they can almost pre-approve you and start to look at loans and other options that may be available to you. And then you can decide then if you wanted to open up a line of credit or something at that point, you can make that call. But to do it in the throes of these types of situations now is more difficult. So getting on that sooner rather than later, I think, is the message.
Correct.
Thank you.
What's the best option for those who have rental properties with mortgages? So there's not forgiveness for those. What was, when this first started, there was a lot of controversy around landlords, because you have the majority, which are really great people, and then you had the ones trying to take advantage of the system, as I mentioned earlier, and that's been addressed. So again, this is a payroll protection program. It's all about employees. So if you own a rental company and you have employees, because you manage a number of properties, then those employees would count. And at the end of the day, the majority of forgiveness will come with 75% being payroll, and 25% will be to cover mortgage payments and utilities. So I think that answers that question. Are you required to be in business for 2 years to apply for these loans? You have to have been in business on February 15th. You have to have 12 months of payroll history. So the 2 years is very typical for banks and lending. On a general basis, if you were to go into a bank and you apply for a loan, they're going to ask you how long you've been in business. And 2 years has been the norm. We're seeing a lot of change to that. The SBA has, again, with the CDFIs and different alternative lenders, they are working with companies all the way from startup forward. They are generally, they're going to pay a higher amount. They're going to take every bit of collateral because that's the greater risk. But that's generally how the lending community is looking at it. Okay. I didn't understand not loans, grants. Is there more to that?
Yeah, I'll take that one. Ellen, so it's a better look at grants to loans. I think you need to look at both right now and keep an eye on both. They both go fast. And so if a new grant pops up, the applications are getting in so fast that most places are having to shut them off just to make sure they can process the ones that they've got and not overcommit funds they don't have. So I would look at both options if you have them available in your areas.
Correct.
Yeah, just a quick note. Obviously, we all know, I think, but I just wanted to mention it. Grants are grants. They are non-dilutive. They're not loans. Once you're given them, you don't have to pay it back, although you have to follow the criteria of the grant. You may have to if you don't. But generally speaking, they are not paid back, and they are dilution-free. They're harder to get usually. They're very competitive. So just kind of keep that in mind as you're starting to weigh your options.
Yes, and Andy, to your point, it really is getting in the queue. We've never seen it to the degree that we have now. And you can see with the PPP loans, with the IDL loans, people get a number when they come in, and that puts them in a queue. And so it's really critical. It's the same for grants. They're heavily sought, and they go quickly. So again, knowing what's available in your community. Thank you, ACA, for the the way that you're able to put those on your site and get them up quickly. So your site is the site I recommend people go to regularly, because I know you're really good about posting these, whether it's crisis or not.
Thank you.
All right, B of A asked me for additional documentation. Wow, do I hear this? They wanted 940, 943, but I'm an LLC and do not have these documents. How do I advise them that I cannot provide them? So if you have employees, you're filing a 940. Not familiar with the 943, they're generally asking for the 940 and 941. The 940s because it validates the payroll, and the 941s because you do get to include state and local taxes, but not federal. You cannot. So SUTA is one that you can include, and a lot of people were confused about that. So if you have been in business and you were for those all of 2019 and you're using that as your basis, being an LLC has nothing to do with it. These are just requirements if you have employees. So you should have a 940 and 941. And I don't know if you do your taxes or you have an accountant that files these, or whoever files them for you, but you certainly would have been notified that they were required.
There was a specific note from Jeff again as following up. He does not have employees at this point.
Okay. So if you don't, then if you're a sole, a sole owner, then you will be using your 2019 Schedule C as your proof.
Thank you. And also, Ellen has posted up her contact information here on it. I know we had a question in the chat regarding that, so please take note of that, Ellen. Great stuff. Really appreciate these responses. One more question came in from Lori. Hello.
Okay, let me read it. Your LLC pays rent and for the use of a 10-acre parcel. So the rent we want to claim is technically but legally paid to us. We're afraid this would be a red flag. It's a separate LLC that you're paying. So one of the things is the LLC or the tax returns are for the separate LLC. They are two separate entities. So paying rent to another entity, because tomorrow you could sell that entity and you'd still be paying rent, but to someone else. So I would go forward with this. I will double check though. So you have my contact information. So if you'll send me a note, I will check with SBA. The good thing is I have a direct line and I will validate that.
Also, Lori, we posted up, and we'll post it again, the invite information for tomorrow and Friday will be open Q&A. We'll get into some of those specifics, I'm certain, during that as well, if you haven't already figured that out by the end of today. Thank you. Did we answer the question on the 2 years on this question?
They need to have been in business on February 15th, and they will have 2019, 12 months of, they're looking for 12 months of payroll information. So it's not a 2 year, but they're looking for 12 months.
All right, we'll give it a couple more minutes for any questions. Thank you so much, Ellen. This information is incredibly valuable. I think it goes into the right level of proactive nature of looking at your banking relationships moving forward. I think that message is so important. Looking at alternative loans as well as grants. We'll try to continue the messaging on this next week. We are going to cover this topic again in a slightly different way, but we're going to continue to message the relationship with your banks and alternative funding sources as we start to move forward on our planning for a really strong restart. So one more question just came in.
So our profit class, we produce that twice a year. So just contact us at the SBDC and we can give you more information. I can tell you that one of our largest clients who we helped grow from say, less than $5 million company to over $40 million company took this class, and with their growth, they not only grew sales, they grew their profitability. And with that, they were able to grow the number of their employees. So there's great success that comes out of this class, because we all think about the P&L and the bottom line, and that's not the end of the story.
And hopefully, a couple things. One, we'll get the links for that. Ellen, if you want to send that forward, we'll put that on our Resource Collective site. In addition, we're hoping that Ellen comes back and gives us a 1 hour overview of that coursework as well. I know that's crunching it into a really short period of time, but we'll get the basics and start to move that into our planning for all of the small businesses. Well, with that, we're going to wrap up. Thank you so much. I really do appreciate everyone's time. We're going to leave the chat window open. Please give us your comments, feedback. We're always open for that. Also, any topic ideas that you're interested in. We'll also go ahead and post really quick, if Mark could post that up, for the registration for tomorrow and Friday, 9 a.m. to 10 a.m. Both will have open office hours for Q&A. Again, Ellen, super job on this. Thank you so much, and everyone have a really great day. And thank you for joining us on our boot camps.